If you're a business owner who's terrified a bank will say no when you finally ask for money, this video is for you. The silence of a denied bank or SBA loan application is the loudest sound you will ever hear. It is a crushing weight that signifies potential end of a dream you have spent years building the foundation for. You've sacrificed time with your family and worked late nights to build a product or service you believe in. But when you finally ask for the capital to grow it to the moon, the bank tells you that your life's work is just a high-risk liability to them. Most business owners are walking toward a financial cliff with their eyes wide open, and they don't even know it. They do not realize the ground beneath them has already turned to dust in the eyes of a financial institution. In early 2026, the rules of the money game have changed. Being funding ready is not a feeling of being deserving. It is a precise state of your business that most people simply do not understand. In this video, I'm going to show you exactly what funding ready looks like in 2026 so you can stop guessing and start preparing. The machine that cannot fly. Think of your business as an airplane. For an airplane to fly, every single part must work together in conjunction. If the wings are too heavy or the engines are too weak, you stay on the ground. When a lender looks at your file, they are doing a safety inspection. They want to know whether their money will stay safe or if your plane is going to crash. The cockpit is your leadership. If a pilot does not know where they are going or cannot read the gauges, the plane is then in danger. In business, if you cannot explain your vision or understand your own numbers, the lender will not give you fuel. You must be the nerve center of the operation. If you show up to a bank with no clear plan, it is like a pilot showing up for a flight without a map. Your left and right engines are sales and marketing. These forces create the speed you need for takeoff. Marketing builds trust and gets people to look at you. Sales adds the thrust that turns that trust that marketing built into real money. Some businesses have a huge marketing engine, but no sales force to close the deals that come in. Others have great salespeople, but no way to find new customers because they don't have good marketing. If your engine are not strong enough to climb higher, your business will stay grounded forever. Lenders look at these engines on paper to see if you can handle the weight of a new loan from them. The wings of your plane are your products and services. To stay in the air, your wings must be light and strong. In the world of finance, this means your products must be high in demand and profitable. It does not matter if you sell $10 million of a product, it costs you $9 million to make them. If your profit margins are too thin, your wings are too heavy to support the weight of a loan. The body of the plane is your ops and overhead. This includes your rent, your tech, your staff, and your daily costs. An airplane is designed to carry as little extra weight as possible. A bloated business with too many expenses is a plane that is too heavy to get off the ground. Even though a lot of those expenses might be investments, you have to look at it like a lender looks at it. Lenders look for a streamlined operation where every dollar spent helps the flight. If you think the bank is only looking at your bank balance, you are missing the most dangerous part of the inspection that they're doing. The rules have changed for 2026. The market in 2026 is very different than it was a few years ago. While interest rates are starting to stabilize and actually go lower, the cost of borrowing is still high. The prime rate is currently at 6.75% as I'm making this video. This means SBA loans can cost anywhere from 7.75% to 9.75%, plus or minus half a point. But the biggest change happens on March 1st, 2026. The government has stopped using automated SPSS credit score for Small Business Administration loans. Again, the government that mandates that the SBA only approve loans with an SBSS score over a certain threshold is now saying that banks no longer need a business's SBSS score to be over that threshold starting March 1st of this year, 2026. Now, lenders have to look at everything manually. This could be good or this could be a bad thing. They are doing a deep dive into your personal life and your business history. You can no longer hide behind a single score. You must prove your worth through a mountain of proof or documentation. Large banks are only approving about 26.9% of small business loan applications right now. If your file is not perfect, you will be part of the 73% that gets left behind and needs to apply for online financing or merchant cash advances and get the expensive money. Underwriters use a special math formula to decide if you get the money. It is called the debt service coverage ratio. This ratio tells the lender if you make enough profit to pay back the loan while you're still paying other bills. In 2026, most lenders want to see a score of at least 1.25. This means for every dollar of debt that you have, you need to have $1.25 in positive cash flow or profit. That extra quarter is the safety cushion for the bank. If you are at or below 1.0, you are losing money every month relative to your debt. No traditional bank will touch you if that is the case. The debt saturation trap. The biggest reason businesses are failing to get funding right now is that they are already drowning in high interest, short-term debt. Many owners took out high interest online loans or cash advances to stay afloat during tough times. Now, these programs, they have their place in the market. You can get them when you don't have the best credit, you're not that profitable. They're not actually loans, they're purchases of your future receivables. So they're easy to access credit facilities with low documentation, but they're more expensive. These credit facilities are like sugar for a person with health problems. They give you a quick burst of energy, but when used improperly, the whole system collapses. In the latest surveys, 41% of businesses were denied funding because they already had too much debt. This is a huge jump from previous years. Lenders call this being over-leveraged. If they see that you are making multiple daily or weekly payments to other lenders, they know their new loan will just be used to pay off old mistakes. So approaching a bank when you're over-leveraged is not the right move. To be funding ready, you often have to go through a period of cleaning up your old debts first. There's a link below where my team will underwrite your file like a bank and show you exactly what needs to be cleaned and in what order. The documentation maze. Being funding ready is mostly about being organized. A typical conventional loan file in 2026 can be hundreds of documents. If you are missing a page, or if your tax returns do not match your bank statements, you're finished. Lenders want to see that you have a separate life for your business. If they see you using your business account to pay for your groceries or your personal car, the good ones will walk away. Another thing a professional business will do is they will keep a data room. This is a place where you have 3 years of tax returns, your profit and loss statement and balance sheet for the last couple of years, your bank statements for the last 3 to 6 months, and your growth plans ready to go in a Google Drive or a Dropbox. If it takes you 2 weeks to find a document that the bank asked for, and they're gonna ask for a lot of documents, they see that as a sign of a messy pilot. They want to invest in a professional institution, in a professional company, not a person who is just trying to survive, which explains most small businesses. So if you're a small business owner, the best thing you could do is architect your file that makes you look like a larger, more organized business, not one that just looks like they're trying to survive and scrambling for their official documentation. Lenders are trained to look for something called the apathy trap. This is when a business owner seems tired or confused about their own numbers. If you do not show passion and discipline, the bank will not trust you with their capital. They are not just investing in your idea, they are investing in you, and they want to see that you are organized and have your stuff together. Over 72% of entrepreneurs suffer from extreme stress. When you are in survival mode, it is hard to look like a professional pilot. But if you cannot lead your plane through the storm, the bank will not give you the fuel to fly. Your path to take off. The map to funding is not a secret. It is just a path that most business owners are too busy to follow. The money is out there for businesses that can prove they are a safe bet. But if you keep doing what you have always done, you will keep getting the same results. You are flying a plane with empty tanks and broken gauges. There is a way to see exactly where you stand on this journey. Below this video, there is a link. Click it and book a call with my team. We will underwrite your file just like a bank would and give you a customized funding blueprint for your business for free. We will show you exactly where you are on this map and the exact steps you need to take to become bankable and funding ready for a conventional institution. The runway is clear and the window for capital is opening. Let's make sure your plane is actually ready to fly.